companies are in trouble. There's one car company, at least this week, is not in trouble. That's
right.
Tesla,
Yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car, and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast. And the numbers have gone up dramatically. And yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018, 17% global market share, including China, that it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
I mean, can we really be that pessimistic about the likes of BMW?
They're failing miserably, and in battery technology. They're not writing down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up? No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months, 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturer, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in, capital spending is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big, is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
2023. Should you purchase Tesla stock? Investors are always interested in the leading EV company. 2023 has seen tremendous success for many tech businesses, like as Tesla, whose shares have increased by an astounding 110 as of the first week of August. A favorable market climate has also been beneficial, as evidenced by the Nasdaq Composite Indices 34th annual increase. The fact that the Nasdaq Composite doesn't increase by 35 annually indicates that it's not. The stocks fell as much as 30 to 40% in 2022, which may have alarmed buyers who are unaware that such events are likely to recur, as demonstrated by the stellar performance of Tesla stock in 2023. A seasoned investor with extensive experience in the stock market would advise you not to be shocked if, after a few years, Tesla's stock drops by 20 to 30% in a period of 4 to 6 months. As you get more experience and witness similar occurrences more frequently, you become accustomed to them and stop worrying as much as you once did. Is the company a worthwhile addition to your collection? If you haven't purchased a Tesla yet, that's what we will discuss today.
A little early to count the traditional companies out of it. I mean, they haven't really almost gotten started.
So
that
is the problem. That is the problem. They have just gotten started, and what they have delivered are cars that don't even meet, whether it's range or other metrics, the Model S circa 2012. Now, of course, there are three other advantages Tesla has. So battery's one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.
With its most recent financial report, Tesla exceeded Wall Street estimates, generating $25 billion in revenues and 78 cents per share, according to current trends. The company produced 480,000 automobiles as well. Although the company had increased its revenue by 86% during the period, shareholders were not happy with Tesla's gross margin, which decreased from 25% in the second quarter of 2022 to 18% in the most recent quarter. Investors should be concerned since Tesla's gross margin, which was 25% previous year, is currently only 18%. This year, the management was forced to lower automobile prices several times, which is why your gross profit margin is low. At a time when consumers are coping with high borrowing rates and inflationary pressures, they took this action to increase demand. Warren Buffett has always maintained that a company's analysis should also consider the state of the economy. Given the rising interest rates and inflationary pressures brought on by commodity prices, how many people, even those who would typically buy one, would purchase a Tesla in the current environment? People are likely to put off buying a car due to high interest rates and inflation. So if you offer your card at a discount, a slightly larger percentage of people are likely to buy. However, doing so increases sales at the expense of the gross margin. So I don't think Tesla did anything wrong in this situation. Warren Buffett has always maintained that you should base your decisions on the nation's economic conditions, including the price, while cuts are undoubtedly mostly to blame for the declining operating margin. Tesla's $943 million in R&D costs during the quarter, a 41% decrease from the previous year, also had a negative impact on profitability. This is because Tesla wants to grow quickly and stay ahead of the electric vehicle race, which means investing a lot of money in research and development. In just one quarter, the company spent nearly $1 billion on R&D, up 41% from the previous quarter. Even with this high margin, it's hard to imagine spending $1 billion a quarter on research and development. Now, is he ready to intervene and take full control if necessary? And if full autonomy is achieved, something Elon Musk believes could happen later this year. But even if it happens a few years from now, it could be a huge financial advantage for Tesla. That's because this software, coupled with Tesla's expanding manufacturing capabilities, could really turn the company into a provider of robotaxis, which could experience unprecedented demand from consumers and drive outsized revenue and earnings growth over time. And then the Tesla stock price will all make sense for everyone. And now this might be a too far-fetched goal for Tesla, but if it achieves that, the amount of changes it could bring to this world, and also the revenue Tesla could be making, would be enormous, and the short-term vacancies in gross margin and profitability, really, are they pretty minor at this point relative to the long-term picture? And in the Q2 earnings call of this year, Elon Musk said that autonomy will make all of these numbers look pretty silly. He has been overly aggressive with his timing deadlines before, so who knows when and if it will happen, but when it does. But it's also pretty hard to bet against Elon Musk at this point, and thank you so much for watching. Goodbye.